and Sharon, do you want me to just pass it off to you? What works for you?
Sure, whatever's easier for you.
Okay, it's all yours.
See if technology works here this time and get the PowerPoint going. Hey guys,
Alright.
I'm Jane Irwin and
Sharon McKenzie.
working the PowerPoint here. Tonight we're going to talk a little bit about raising capital. And basically we've been here with James and Nicole. We partnered with them to take on the residential side of things while they're doing multifamily. So we get the best of both worlds because we get to learn from them, and they're phenomenal teachers. And then we get to hang out with you guys and do residential. It's a teaching Tuesday, 15-20 minutes we're supposed to. We don't seem to ever really hold it to that, but if you like what you hear, we have some a webinar that's coming out here directly, and then you can go to the website there. And basically on the website there's any number of courses that has to do with all different topics. And it's 30 years of experience some of these folks have had. We don't have quite as much, but we're trying to kind of give back and teach people things not to do, because we did a lot of things we shouldn't do back in the day. So we like to do the do's and the don'ts and the tips and the tricks. And tonight we're going to talk about raising capital.
Okay, these are just a small version, a short list of ideas with raising capital. There's so much more and so many other creative ways to do that it would be a full couple-hour class. So as Jane said, we're gonna give you a little condensed version and things to look at, and ideas and ways to talk to money lenders. These are some of the ones that we've used and we're familiar with. So when we first started getting involved in real estate, we started just using our own money for savings and investing. When a lot of times they do try to use other people's money, it's a lot, there's a lot of reasons for that, and we'll get into that later. But if you do have reserve and money available, you might as well use it and have your money grow. And as you continue and build more properties in your portfolio or do more flips and gain more capital, of course, use that money and grow your own money as well. Like the house we're flipping that we were talking to you about in Nicole's, the mobile home that we're flipping in a nice area, where we got private money lending for the acquisition of the property, and we're using our own money for the rehab cost. So, and then we're working with another partner. So we're kind of doing a whole gamut with that one. We have a joint venture partner. So that's, one that you might want to start with until you start getting credibility and talking to people and reaching out to people and building trusts and relationships. Another one is traditional funding. You can build a line of credit, go and just buy the house with a bank loan or mortgage. You can do more traditional means. And then, as I was saying, joint venture, and that's pretty much a partnership that you partner on one project with another investor, or it could be a money lender. And typically, you can put anything you want in the contract. Typically, when we joint venture with somebody, we pretty much split the profits after everything is all the money and capital is given back 50-50. We just do a 50-50 split. If one partner brings in a little more to the table, you might want to reward them and maybe a 60-40 split, or however you want to work it out. You can be creative with your contracts and your partnerships. Then seller financing and creative ways to structure deals with the actual homeowner. You can stretch it out. Sometimes you give them a nice down payment and then stretch it out for however many years it is to pay off the loan, or you can have, start paying off monthly payments at the beginning with no down payment, but then have a balloon at the end. Might stretch it out to 5 years and then pay off the remainder, the balloon at the end of the 5 years. So, that's great once you build rapport with the owners, and especially if they want to get the most out of their house. If they're selling the house and you can't bring them down to a reasonable amount, then say, okay, I can offer you closer to asking price, but you have to work with me too. We have to come to some sort of agreement. And that's usually under financing, so you can spread out the payments. And we have the private money lending and the hard money lending. And we did learn a lesson here that we kind of got private money and hard money. Some of our private money lending, we didn't realize was actually hard money lending. We always assumed it was private money lending because, actually Nicole told us, didn't she, last week that, there was, the interest rate. Some of our private money lenders, we were giving them an equity share at the end, and they were charging 8 to 10%. And she said a lot of private money is more like the 5 to 7% range. So, but that private money lending is great, and we do work with people who have self-directed IRAs or Roth accounts, or if they don't have them, we teach them how to open them up and kind of hold their hand, walk them through it. And then they, it builds a trust and confidence in us. And then we can start using that money to grow. And we've done that with how many people? Like a handful of people, good amount of people. So, that builds up the credibility right there when you're helping them, showing them how to use their money more effectively and more efficiently in a better tax bracket or tax-free a lot of times. So, that works really well.
And I guess the private money, this is when you start looking for, relatives or, just other people that have money that are just, they're not investors, so they're not investor savvy. They're not going to expect 10, 13, 14%, but you're still helping them out, because if the money's just sitting in the bank and they're not making anything, 5% is really good. I don't know what the bank's paying now or the money market, and check that recently, but typically the money market is next to nothing. So if you're even giving them 5 or 6%, you're helping them out because it's making them money. Look to a lot of senior citizens or people on fixed incomes that, they have a little bit of money in retirement, and you can boost that up with them, that couple $100 check or whatever it is that they get, that might help them buy groceries or, so think of it, we really had to wrap our mind around, I just come from a family and generation of, I don't borrow money. Like I would work 18 jobs before I would borrow money. So, wrapping your head around that, you really have to, you're helping them. So it's a joint thing. You're helping them make money, and it's not really borrowing money. So I had to kind of wrap my head around that one.
Especially with the Roth and the self-directed IRA, because when it costs money, you're paying fees to put your money in those accounts. So if your money's just sitting there and not moving, then you're losing money and you're wasting money. So that money constantly has to be circulating and moving to make sense. And we've talked to some people that are kind of up in the ranks of a couple different IRA, what's it called? Companies, the companies, the custodians. Thank you. Good. I'm getting like Nicole. I couldn't think of my words.
Faster bedtime.
The custodians, and they said that maybe 30% of the people actually are actively investing with their money, and the rest of them is sitting there. So we look at it like now we have a different mindset, like Jane was saying, that we're reaching out and actually helping these people and help them grow their money. And it's a win-win situation for everyone involved. And hard money, we were intimidated with hard money. We've always been intimidated because it seems so scary. It's very short term, and we're always nervous that if we go over for some unforeseen issue, then they're going to take the house back, or they're going to charge a lot more interest, which oftentimes they do. And we've seen hard money, it would be like 18% sometimes. Sometimes it would go up to, I've seen 6 points. So hard money, like
in 6 months, like our biggest thing was always the time frame. Because if you're trying to do a flip, and as we all know, nothing goes to as it's supposed to, something always happens, especially with us. So, I just always knew that 6 months was not going to be 6 months. It was going to be longer. So, and even if it did turn out that it was 6 months, it was still that cushion of, we had a year that we could borrow the money that, if things didn't turn out right. But, we had that cushion.
And we didn't like, we would talk to hard money lenders and they would say this is their structure, their how they structure their deals and all. And I guess everything's negotiable. You can talk to them and negotiate, and I'm sure they, that they have that happen all the time where it goes past the time, and they might just raise, add some extra points to it or raise the percentage rate or do something. But if not getting in the way, the money is getting in the way of you not doing the deal, I would rather give a portion of
Or
the
half of
profits
it, give
away.
whatever, yeah, because nothing of nothing is nothing. So if
Right.
you can make 50%. And the good thing about hard money lenders also is they look at the deal. So if it's not a good deal, they're not gonna lend on it because it's not a good deal. So even with that 13, 14, 15%, whatever it is, they're gonna know it's not a good deal. So then that might be an indication that you shouldn't do that deal.
Exactly. That's a great point. That is a great point.
And the biggest thing with raising capital is your network and building relationships. I think we've said it just about every week on here, relationships is everything. So, people want to do business with you if they know, like, and trust you. And if they don't, it's they're not going to deal with you. So, the biggest thing is building relationships. And sometimes it takes a time. They're people are feeling you out. They're seeing not what you say, but what you do. So if there's some indiscrepancy about how you act on Facebook and then how you act when you're talking to them, or just different things, or what you say, and then if you say I'm always on time and then you're always late when you're meeting them, they're going to pay attention, because if you're late meeting them, maybe you're late meeting the contractor, maybe you're late meeting your anybody. So kind of keep those things in mind, and that's what people are looking for, especially money lenders, because they're feeling
They're seeing reasons why not to invest with you instead of reasons why to invest with you. Their process of elimination a lot of times. And the benefits of raising capital, obviously the one benefit is access to money so that you can
more capital,
actually
more deals.
do the deals. Yeah. So allows you to tap into a broader pool of funds, and then you can increase your portfolio and do more projects. More projects at once, and it diversifies the risk by bringing multiple private investors for different projects. You can spread the risk across various investments. It can help to protect your portfolio and your losses. If you lose on one project and then the other project does a lot better than anticipated, you can kind of like spread the wealth or spread the loss. Increase deal flow. You're comfortable that you can obtain capital, and you have different various ways of obtaining capital. So you're going to look harder for deals, keep your pipeline filled, have more opportunities that you don't have to turn down and say no to. And then when other people know that you do have access to capital, then they will come to you with the good deals. You'll be their pocket buyer, and then the deals just come organically and naturally. And it enhances your credibility when you partner and work with private investors or money lenders or different equity or partners. Word gets out. They see that you do what you say you're going to do. You say, you're loyal. You're honest. You're transparent, and it works out. And they want to work with you. It spreads. Like a lot of times they'll say like negativity spreads if you do something wrong, then your name gets spread all over the place like mud. But I think we spoke about it before, but we're very good to our private money lenders. We let them know what's going on. We keep the lines of communication open. We build a relationship with them. We pay them early. We do what we say they're going to do. And we've heard people talk us up and saying, Jane and Sharon, you can be comfortable lending your money to them. You're going to get it back. They're going to do what they say they're going to do. They're going to do extra for you. So the positive word gets out there. I know a lot of people, so much negativity, and you always think that, you do something wrong and it's going to spread negative, but the positive spreads as well too. It's got to be, the right mindset. And then, leveraging, it's all about leveraging. And
I think another thing too is access to expertise.
Yes.
And, this could go back to multifamily. We haven't delved into that, but obviously, if we were to delve into that, not only is it, maybe capital, but then there's like, we just wouldn't try to go and buy a multifamily without some help. So then maybe you bring one of your private lenders or your own capital, and then you leverage, other people's expertise. And obviously here, in this community, a lot of you guys are staying over for multifamily. So we kind of have the best of both worlds here, where there's expertise in both fields. And then those relationships come back into it because we all know each other and, kind of know what everybody's about on this community.
Absolutely. When we first started out, we would joint venture with people to get their expertise and their understanding. Now it kind of feels good that people are coming up to us with the deals and the houses to partner with us to kind of get our expertise and our ways of doing things. So it comes full circle. We were helped and people brought us along at the beginning, and now we're in the posture where we can help others and do for the people that are really wanting to work and learn and bring them along. And it's like, I know we keep saying it, but it really is all about relationships, building those relationships, creating those relationships and keeping them going. And it's not just like meeting somebody and clicking. You have to constantly nourish the relationship. You always, reach out to that person, talk to them, send them a text, send them an email, ask them if they need help or what you can do for them. There was a guy that we know that lives near Orlando, and he does he does projects near him, but he's been expanded and going to Tampa, down to Sarasota where we live. And we try to reach out to him periodically and make sure we keep the lines of communication open. And he just reached out to us not too long ago and asked us to go evaluate and due diligence and look at a house for him that he's acquiring. So, it goes around, comes around. He helps us with things, we help him with things, and it's, help each other along the way. That's what it's all about. And obviously when you have the private money and money that you can obtain quickly, you can execute faster, get the deals together and deal flows and structure and faster and close more quickly. You can close in 10 days if you have to. Once all the work is done, the title work is done on the house, you can just close as soon as everything's good to go with the legalities and the lawyers. And I don't know if you need to talk on it, just talk over me if you have any ideas. And flexibility with the deal structure, more flexible, and then you can start putting things like options. You can put options on houses, or the owner financing, like we were talking about. You just all kinds of creative deal structures out there. Think outside the box. It's so many things you can do with real estate. It's so versatile. It's one reason why I love it. It's you can have so many different niches. You can have a niche that every one of us can have a niche that not other people have. So you kind of capitalize on the market.
And raising capital for creative deals is sometimes a little bit better. You could get a option on a house for, maybe $10,000, but, then you go and, one of your friends that, it's sitting in a money market, you borrow that 10,000 for the option, and, you're helping them out. You got an option on the house or subject to something like that, or lease option, any of that with a smaller amount, then you can kind of, help some of the other people that don't have the, 50,000 or acquisition for a house at 100,000. You kind of, helping some of the other people grow their money.
And since Jane likes the do's and don'ts, we threw a couple of do's and don'ts in here your way. Here's the do's. Always have a business plan with your investment strategy. Like, think of ways how you reach out to the investors, what you say, how you communicate to them. Have now I'm having another brain cramp. The package they put together, credibility kit. Thank you, a credibility package for potential investors.
And sometimes it doesn't have to be a written. You just make sure that what you've done at one point, we hadn't really realized it, but you just, deal after deal, it starts coming. And at one point we were well over, I think 80 deals, and we didn't even, we were kind of bumming out talking to a coach saying, we haven't really done anything and we're not moving forward. And, he's like, God, you have 87 deals. What is your problem? Kind of thing. So make sure you keep track of that. And it's not bragging. It's just, it's people want to know that you're experienced and that they're giving their money to somebody that is experienced and is gonna treat their money good. And then, and make sure you always know the market and be able to pivot accordingly, because you don't want to get caught in where, you're something that was a year ago that you hadn't really paid attention to, and then say, oh, this is a great market to go into. We invest anywhere. So, we're more cognizant of looking around at things, and, Nicole's and James are in a million different states too. So, I wouldn't want to go to a money lender and say, hey, I'm trying to raise capital for a house in Flint, Michigan, and be caught off guard when they say, have they solved the water problem there? Because there was a water problem that, now the market is like totally different and they're practically giving away houses. So you don't want to be caught off guard. Make sure you know your market, make sure that you can answer questions. And then you just start building a track record with the capital partners. Most of them will start out a little bit. They'll give you a little bit of money just to see how you do, and then more. And then if you're paying early and doing everything you said, communicating and keeping everything transparent, if you have a problem, the worst thing to do is hide your head. You just pick up the phone and say, hey, this didn't kind of go the way it was supposed to. And most people are, 99% of the people are probably 99.9, because some of them are investors and they've lived through it. And most of them are just going to be like, okay, we'll work it out. They might charge you an extra point or some interest or whatever. But if you hide and they drive past the house and, you didn't do what you said you were going to do, or you're way behind, or whatever it is that you're trying to hide, that's not going to be good. And then that word's going to get out too.
Exactly. And we always say that our private money lenders or our money lenders are our first and foremost person that we pay. Before we pay anything else, we always laugh and say, we'll eat ramen noodles for the next year first before we don't pay them. So we do everything in our power to let it get to the point where we do have to have that conversation with them. But if you do have to have that conversation and you've tried everything else, then absolutely that work something out. And don't let too much time go by before that happens. And did we tell you the importance of networking? Network. Go to meetups, conferences, events. And that's seriously how we've gotten most of our money lending, is just, talk to people, build relationships, keep the friendships going, keep things, and they consistent, persistence, patience. We've had a couple money lenders that's, weren't interested. No. And then they turned around and came to us and said, I want to do a deal with you. Let's find a deal, where we would have never thought they would have, lent us money. We didn't think they were interested. So.
And even outside of real estate, just listen to what people say. Like, I think we get, and we go to the dog park a lot with our puppy, who's being good right now. And, just there's so many different conversations there, but there are people that, you'll just be talking to them and they're like, oh, I retired and, 3 years ago. And then, you just ease into that conversation about, well, what are you doing now? Or, or some people will be like, well, I have this, retirement money I can't use until I'm, 59 and a half or whatever. And, it's just sitting there, so start to listen to people in every walk of life, because you'd be, Uber drivers, a friend of ours was in an Uber and the guy was killing it with money, but he was getting crushed in taxes. So they ended up turning that conversation around to getting him set up in a self-directed IRA where he put money in there, and then now he's a money lender. Just, a 15-minute conversation while you're driving someplace. You'd be surprised what, if you actually talk to people instead of people just playing on their phones and ignoring everybody. But there's, a million people out there that have some kind of money that they want to grow, and you just have to be the facilitator of the growth.
And with do's, we got some don'ts. And don't exaggerate your potential returns. And we're always very conservative with our numbers. We seem to be even more conservative than the average person, and that you won't get hurt if you're conservative, and you're not going to lose money, most likely. And we always have the mantra of we under promise and over deliver.
And that goes towards anybody. That could be family members or whoever. You just don't want to get in the position where you're like, oh my God, I'm going to make you, $5,000 in 2 months. And then, you're not doing, you don't do what you say. And then, they're not going to lend to you again, or they're not going to believe in any project that you have going forward.
And don't neglect your due diligence on the actual investor. Make sure that they are who they say they are, and you do some research on them.
You just don't want to be in the position where they've said, yeah, we'll lend on that. And this could be family. And we actually know somebody that, it was a family member, and they kept saying, oh, go get a project, and, we'll do it. Go get a project. And then at the end of the day, when it came time to close on the properties, they did it 5 different times, and that person didn't get it through their head. Like, they're never going to lend you. They're going to keep saying it, but they're not going to lend you the money. So you don't want to get caught where you have to close on, August 1st, and, they end up not really being a lender. They just kind of pop up like they have money, and then they don't.
And don't ignore your marketing. Your marketing puts your name out there. Market organically, market locally, market on social media. Anytime you have an opportunity to market yourself, get out there and do it.
And it's not marketing, because I would probably guess this is SEC violation. Like, you can't say, hey, I'm looking for money lenders like that, but just, market yourself that, what you do. A lot of people, like, and in the beginning, we didn't tell people what we did, because everybody, just about everybody we knew said, you're going to fail. You're not going to make it. It's a waste of time. You're wasting your money, all this stuff. So we were kind of, I guess, embarrassed to say what we were doing. So we didn't let a lot of people know that we were involved in real estate. We were just kind of going behind the scenes and, just not putting it out there. Now we like tell everybody what we're doing, but it's, so don't be afraid to put it out there and, say, hey, I'm investing in real estate. And then, people start saying, how's it work? And then, that's your opportunity to say, hey, I make people money with, have a little pitch together with, 30-second or less that, this is what I do, and this is how I make people money. And then that, and that can be for everyday people or investors.
Mm-hmm. As they see you become more successful, having more projects under their belt, they start thinking, I wanted to know on this. So it really works. And don't skim out on the legal contracts and agreements. Make sure all your I's are dotted and your T's are crossed, and you have all your ducks in a row, and all the important information is within those contracts.
And funny thing about this, like, hardly anybody uses the word skimp, but we've heard it 3 times now since it was in this PowerPoint. That's just a side note.
Because I was like, what word do I use?
Spell skimp.
What word do I use? What word do I use? And she's like, well, let's try skimp. Is that a word? And then we were at a meeting right before the 6:30 meeting, and 3 people use that word, and you never hear it. That's power of suggestion. And don't overlook the importance of team members. Have the members on your team to help you along, especially, it sneaks up on you. For like Jane was saying, we had a couple of houses here and there, and pretty soon we had 85 houses, and we're like, how did this happen? And so we were lucky. We were able to hire team members from an investor who was retiring and moved into a different part of the country. And the bookkeeper's amazing. And that's how we're confident that we can pay early and make sure that our bills are paid, and the lenders are paid on time, and everything's taken care of. It's worked beautifully. And don't be unprepared when meeting with your investor. Like, make sure you have all your numbers in order, your contracts in order, your scope of work, what your plans are with the project, with the house, what you're going to do with the house, whether you're going to hold it, long-term hold, short-term hold, if you're going to flip it, you have everything there. Because if you talk to a money lender and then you start and look up and you don't have all your ducks in a row and all your numbers lined up, you've just lost your credibility with them.
And this will go a little different with a private lender that's like a non-real estate person. So if you're looking for capital from a family member or, just Harry down at the barber shop, whoever, it's going to go a little bit different because you don't want to tell them too much because then they'll have a million questions as to and coming at you from a non-investor. But so investors, you want to have one conversation, and non-investors, not that you're hiding anything, but you don't, you might not want to give them like 100% of the details because they won't understand the scope of work and they won't understand, why it costs $2,000 to close the property, and they won't understand a lot of the things that investors, obviously know and are prepared with. And then with an investor, you need to have all those answers.
That's true. We did a couple times we confused the money lender that was private money lender that wasn't in the industry, and we went too far with explanation, and then they're like, well, why don't I want you to use this color paint, or I want you to use this material, or do this or do that, and we're like, well, it's a rental, this is the way you do it, or this is what the flavor of the neighborhood is. We don't want to, he wanted to over rehab the house for what
A rental.
yeah,
right.
or what called for in the neighborhood. So she's right with that. And the summary: raising capital does come with responsibilities. You want to remain transparent, and you want to provide updates and progress along the way. And like we were saying before, never cover up the issues, so just reiterating. And relationship building, keeping the relationship is great for long-term success. That way, when you do it with the right approach and you have money lenders, you only need a couple money lenders, and they're your pocket money lenders that you go to every time, and they're available for you, and no questions asked. The money will be at the closing table ready for you to go. They'll send it all up to your title company. The ones we use, they already know what title company and everything, and it's already sitting there for us. So this stuff works. We've we knew nothing about real estate and investing before we started this. So if we can do it, anybody can do it.
And we kind of wish we had gotten more involved with like these kind of things early on. But I guess that's Virtual REI Academy. That's what we're trying to do. We're kind of trying to give back, and if you want to go to the website and take a look at it, it's just there's tons of courses on tons of different things. And I think that's the good thing too about real estate. You can, and we have a little bit of ADHD, I think. Well, don't all real estate investors, but and it's not shiny object as much. It's just like we want to learn as much as we can. And, like you learn about one thing and you perfect that. And then you're like, well, what can we learn about now? So you find yourself going in different directions, or something just like, I don't really like that. Or, this this isn't my cup of tea or whatever. So you find something that is your cup of tea or your niche. And then, you're happy to move with that. And on the website, there's a gazillion courses on different things that, you can kind of direct what you're interested in and what you want to do.
And taught by different people, different practitioners. And
it's funny, like, we're really talking about bringing in a lot of different guests, because instead of us just here talking all the time, bringing in different people, we're kind of excited about August because all of a sudden we got a whole bunch of yeses. So we're putting them in August, but, so it's a whole bunch of different topics. And it's something for somebody that like we might not be interested in tax liens, but that might be somebody else's jam. Or we might not be interested in Puerto Rico, but there's other things that other people might be interested in. So we're kind of excited. We're going to bring in more guests, which obviously gives you more access to people and more deals and more information on different topics.
does anybody have any questions or any maybe a story or something, or how the opportunities for lending went well or didn't go well? Or
Shy crew tonight.
Your PowerPoints are getting awesome.
Oh, thank you. They're fun.
I'm no good at them, so I'm always amazed.
Nicole does good too. Hers look great.
Yeah, no, she's very good too. Mine are
Anybody have
just
any
20
questions?
pages with bullet points.
Has anybody had any like experiences, good, bad, indifferent, or any ideas or ways that
I
they?
have I do have a question.
Sure. Hi, Corey.
Hi, how you doing? So one thing you mentioned, one of the dues that I thought was really important when you said know the market. So you are in multiple states. I think that's what you mentioned. So how do you know, what is it that you really pay attention to, or what do you follow to actually stay on top of the market in the different areas or the different cities?
I think it's a host of things. Like you always have to be aware of the news, and we are in markets that other people won't go in, and they say we shouldn't be there. But it's if you have boots on the ground. We always scour like the news articles, and then there's population, and just doing research on that particular town or that particular area. Flint, Michigan is just, it comes to mind because you can just, very easily, I think there was a Netflix series and some other stuff, but, so say a couple houses that, I'm interested in right away, I would just put that city in, or that town. And then obviously you try to find boots on the ground, or, most of the places we have an affinity for, either we have family, relatives, friends, other investors, and then we can say, hey, what do you think about this? So we reach out, those relationships come in handy. We reach out to that. A lot of the neighborhoods, we want to make sure there's a Walmart, places of worship. You can,
Jobs.
jobs, because you don't want to get, say pick up 5 rentals in an area where there's no jobs, then you're going to be dependent upon people that are driving to work. So there's just a whole host of things that at some point we're doing a course on, just investing outside your area. So we'll go into a lot of detail there, but those are the main things. Just Google is do your Google Maps. You can see, pretty much the whole area with that, and then your Walmarts and different stores, jobs, industry, and then a quick Google of that city or town. You can find out a lot. I mean, we went down to just. We do a lot of lease options too, and we're selling on a land contract. And one potential person had told us they had a fire incident at their other house, which is why they were looking. So we went as far as to Google that and go to the fire department, all that, to make sure they didn't start the fire. But so there's just different ways of verifying that just Google is your friend with most things.
And we kind of us, because we know that a lot of cities, especially smaller cities like Baltimore, it's block by block, and sometimes one side of the street versus the other. So when we do virtual investing, we kind of stay outside of the cities, but not too far out where you're in the boonies, where there's, like Jane was saying, no resources. So we like kind of like a sweet spot right in the middle, where there, blue collar workers, there's industry there, there's markets there, there's people live and work in a nice area, and then you don't have to follow the stringent guidelines and legislation that cities have, and we're not going to be gigged with the
Code
violations and like in the middle of a city will do. So so we kind of are cognizant of that when investing from afar.
Does that help?
Yeah, that definitely helps. One more question though. When you said the business plan, you would like an investment strategy. What did you call it? A credibility set? Is that what you said?
Credibility kit. That would just be, how long you put together how long you've been investing, if you've taken a certain amount of courses, or what courses you've taken. Early on we went to, just in Baltimore, there was six meetings, I think, every month, and then 3 or 4 conferences and all that. So just keep track of all that stuff, because if somebody says, well, how many flips have you done, and you've only done like 2, but then you can say, but I went to this course and I've taken that course, and I've seen this person speak, and so you have some other stuff to fall back on. Or my partner is, if you have a people that you've learned from that you can say partner with, or that will help you with the flip.
Yeah, and even if you've only done a couple and you were very successful at those couple, show
Keep
the
track of
numbers,
them.
the raw numbers. This is how much I obtained it for. This is my profits, and people look at that.
Great, thank you.
Susan.
Sure.
Thank you, Susan. I'm glad you enjoyed it.
Any other questions? Quiet group tonight. All right, well, we'll be cognizant of time. I just we appreciate everybody being here. We're really trying to grow the audience. Just some things we have coming up, tax liens, and we'll have some dates out and stuff, but we actually are getting Joanne Musa here, the tax lien lady, so she's going to be talking about tax liens and tax deeds. We have somebody coming in on environmental stuff, which like we didn't think too much of that, and nobody really does. That's down there on the totem pole with what you think about, but lead paint, oil tankers in the basement, different things can hurt you. We got Mark Jackson coming in. He's going to be talking about the portfolio he's done in Puerto Rico. So we just have some different things that this month that we're kind of excited about, and hopefully everybody can keep coming, and we'll keep getting better and bigger. And check out virtualreiacademy.com. And if anybody needs to get a hold of us, Jane and Sharon at virtualacademyoutlook.com. Outlook.com?
I think. Yeah. There it is. Oh,
Yep.
that's the Virtual Academy.
Yep, and on YouTube for any replays here. All right, guys.
Yep, James put the Facebook group and the replays, the YouTube replays on the chat. Okay.
All right. Nothing else. We'll call it a night.
Thank you, Jane. Thank you, Sharon.
Yep.
It was great.
Yep.
Thank
See you guys.
you.
See you guys next week.